Hey everyone, Steven here with the Trading Channel, and in today's video, as you can tell from my awesome drawings of flags, triangles, and pennants, we are going to discuss how you can use these simple price action patterns to create a strategy of your own that you can use in the Forex markets. I have taken the liberty of writing down some steps that I think would be important to take while considering using these patterns in a strategy, and those steps are: always determine if the market is in trend or in consolidation. And the reason this is important is because although these simple price action patterns often are forms of consolidation, they are actually continuation patterns of an underlying trend. What I mean by that is a flag pattern, for instance, is a pattern that forms after a large move up, and the pattern itself is just a brief form of relief from the underlying trend. So the underlying trend would be up, the flag would be a brief form of relief before breaking out into new highs following the underlying trend. So it is important to always determine whether the market is trending or consolidating, because these patterns will not work quite as well when the market is consolidating, and you can actually lose a lot of money doing that. You want to make sure that since these are continuation patterns, you are in trend when you trade them. And this is a lot of the reason why these simple price action patterns don't work for a lot of traders, is because they don't follow the first rule. They don't follow that first step. They always just trade every triangle, every pennant, and every flag that they see, instead of waiting for the market to be in trend and trading based around that underlying trend. So now that you have that information in hand, the next step would be to decide what simple patterns you want to use. Do you want to just trade flags, or would you like to trade flags and ascending and descending triangles and pennants? So figure that out, and once you have that decision made, make some non-subjective rules for trading these patterns, whether you're going to trade an ascending triangle based on a breakout of the highs, or you are going to trade the second support level created after a trend line is made for the bottom of an ascending triangle. That would be an example of some of the rules you would have to pick between. Same thing with the pennants, and also same thing with the flag pattern. Next, write down those rules that you have created, and the final step, step 5, test and execute your plan. Alright, so if all of this sounds pretty interesting to you, then stick around through the intro and disclaimer. Make sure to subscribe if you're new. Click that like button for me, and I'll be right back. Alright guys, so before I get started diving into the charts looking for these simple patterns, I'm going to go ahead and draw out on the chart in front of you some of the rules that I've come up with to trade these simple patterns that I think would be really helpful for you, at least as a starting point. And of course you can change any of these rules to anything that you would like. You can use any indicators that you would like, or you can use no indicators and no EMA and just base everything on lower low, lower close, higher high, higher close candles, which would also be a good idea testing this strategy. But as a more simple and non-subjective way to use this strategy, I am going to use a 200 EMA, and what I'm going to do is just draw on the chart, and we'll just pretend that this is the EMA. This blue line you see here. Okay, so as for my strategy, the way I've chose to make these rules, what I will be looking for, I'll use green for price action. What I'll be looking for is a break above the EMA, a pullback, and a new high. So before I even look for some of these simple price action patterns, I have to see a new high after a break above our EMA. So here we had a break above the EMA and now a new high. So what I'm going to be looking for is any type of simple price action pattern, from a flag to a triangle to a pennant, and also any kind of wedge patterns. So what I'll do here is just draw in a little flag pattern, and this is what I would be looking to trade. When seeing this kind of formation here, the big impulsive move up that breaks previous structure after breaking above our 200 EMA, I'll be looking for two resistance levels to be created, one below the other, and I will use that as a basis for my flag pattern. Draw our flag pattern out here. and obviously we would hope for a breakout to the upside of this flag pattern. And I'll be using this same technique for pennants as well. As you can see, another break above a previous resistance level, which is the first thing I'll be looking for using the rules that I've created for simple patterns, is a break above a previous resistance level, and then a pennant formation that broke out to the upside. Now as for triangles, ascending and descending, I can use this same way of trading after a break and close above previous structure, which is what I'll be doing, but instead of only being able to trade the breakouts from the upside on an ascending and descending triangle, I have made a rule that states that I can trade an ascending or descending triangle as long as we don't break below our previous lows. So here would be our previous lows, our previous lowest lows, and what I mean by that rule is that I can trade a triangle from any point between the lowest previous low here and the higher high. So any point between there, I can trade an ascending or descending triangle and trade the breakout in the direction of the underlying trend. There we would have a descending triangle towards the middle range between the higher low and the higher high, and trading the breakout of that would be appropriate according to my rules. So now that you have an idea of what I would be looking for on the charts while trading these simple patterns, we'll go ahead and go down to the charts of the euro dollar over the past couple of months and see what we can find. Alright guys, so now I will take you through the euro dollar chart of the last few days and show you some trades that could have been taken based upon the rules that we created earlier in the video. The first thing that I did was just scrolled back the chart to the first place I saw that we have come down and touched the 200 EMA, which is here. So once we've touched that 200 EMA, according to my rules, I'm waiting for a break above the 200 EMA. See if we get it. Yes, we do. Now I'm waiting for the creation of a high. Here's the creation of a resistance level. And now, according to my rules, I'm waiting for a break above that resistance level. Little pullback here. And still waiting on the break above. We got it here. And now we can start looking for some of those simple patterns, a flag, a pennant, or a triangle pattern. Obviously here we have created new higher highs, and here we have created a flag pattern, our pole looking like this, the resistance level being here for the flag pattern, and our support levels being down here. Waiting for a break and close above, we get it there. Now we place our stops and targets. Obviously targets would be up, stops would be right below the previous swing low, and targets would be higher than this, but I would have to move the chart over, and the whole point of doing this is to not see what's in front of you on the chart. So we got a nice target hit. Let's assume we're taking a 1-to-1 risk reward, and now we're looking for any other simple pattern because of the break above our previous resistance level. Here was our previous resistance level. We obviously broke above it, so now we wait on any kind of simple pattern. There's another resistance level here. From here, now we can pull a flag pattern from resistance to resistance. And the pole would be from here. Not that it really matters, but that's just how I've decided to draw these flag patterns out for you guys. Waiting for the break above, we got it. Now stops again below our previous swing there, and targets, assuming we're taking targets at a 1-to-1, close to where they're at already. Obviously you can take much more than a 1-to-1 risk reward for your targets. You can use extensions or inversions. You can use an extension of your previous low to high here and down and take your targets at a 127, a 1414, or a 1618 extension. And you can also do what is called an inversion, which would be from your swing low back to your previous swing high. So we would take from swing low up to swing high, back down, and as you can see, you could also then put your targets at a 127, 1414, or a 1618. Also, I have customized the extension tool to give me a 2 times any extension I draw. So what this 2 in red up here is just 2 times this move from here up to here. And that's a way I'm testing to take targets on some of these simple patterns. But assuming we took a 1-to-1 here, we have hit targets and are still looking for simple patterns. We have created higher highs, so we are in the process of looking for a triangle, a flag, or a pennant. Any one of you that are familiar with an ascending triangle will see that here we've put in multiple resistance levels and higher support levels. This is an ascending triangle, and what we would do in this case is wait for a breakout only in the direction of the underlying trend, which is up. So we're only waiting for a breakout of our top line of the ascending triangle. If this bottom line is broken, then that is irrelevant to the process we're using. Here we have a break and close above our top line, so stops go below the swing low, and targets 1-to-1 or whichever type of target you choose. And if we scroll forward, you'll see that we would have hit targets there. And now we've just kind of fallen off the edge here, back down in previous support levels. Alright guys, so now that we've looked through the charts and you've got an idea of how I would test these simple patterns, what I'm going to do is go ahead and go to a couple of live trading examples that I took today using these simple patterns and the rules that we created for them today. Before we do that though, I would like to encourage you guys to share your ideas in the comment section below this video. If you come up with any other way to trade these simple patterns and to make them more profitable, then don't hesitate to let us know in the comment section. And also, if you decide to test these patterns in the way that I've shown here today, be sure to keep me updated and let me know what you've come up with. So now we'll go to the live trading examples on a couple of New Zealand pairs. Alright guys, so here we are on the New Zealand dollar 5-minute chart. And a couple of hours ago we went short this pair because of a pennant formation that formed after an impulsive move down. So what I'm going to do now is just walk you through some of the analysis that we did in order to get involved in that pennant formation. You can see here that we have broke below our 200 EMA, and according to my rules I need a rally, which we get here, break below, rally, and another lower low created. And now if we scroll down, we'll see that what we were looking for is a pennant or a flag formation. And right there, I already view this as a pennant formation. You may ask why? Well, because we've come down, we've put in a support level, a resistance, and a higher support. At that point, I see this as one of two things, either a pennant formation or a descending triangle. Either way, I want to trade this on a breakout of these support levels. So I'll go ahead and draw in a line for those support levels. And we can also draw in these resistance levels. Since this one here was created, we can draw these resistance levels in, and you see that we have a pennant. Now what we're interested in is selling the break below those support levels. As you can see there, this candle here, we had a break below the support levels, and once we came up to retest the line is when we went short, and with a stop that was above our previous resistance, and a target that was based on a 1618 extension of our previous swing high down to swing low. So that's where we took our first targets off, and now we are still short half of our position, waiting the continuation of the trend to the downside. So if I just draw out over here to the edge of the chart what the market's done, maybe it'll be a bit more clear. I know this looks a bit messy. So what we did was came down and formed a pennant formation. At this point right here, I know what I'm looking for. I know that I'm looking for a break below these support levels. Why, you might ask? Because we have just put in an impulsive move down, and this second support level tells me that we are either in a pennant formation or a triangle formation, and either way I want to sell the break of that support level. So at this point I will be looking for a break below this level, and I will either sell the close of that candle depending on how low it closes, or the retest of that line, and expect some sort of continuation to the downside. And of course I'll be taking off one target, one position at somewhere around a 1-to-1, just to ensure that I make profit on the trade, and at that point moving my stop loss to break even. And then after that I'll be waiting on a lower low followed by a lower high and a break of that previous low in order to move my stop loss from here down to here, and I'll follow that down until I've either hit my second target or become stopped out on trail stops. So that's what I would look for before entering the trade, and exactly what I looked for before entering this trade, and this is how I'll be managing this trade on my way down to second targets. And my second targets will be based on an extension of the bigger, most previous move, which for me would be from this resistance level here down to support and back up, and I will be looking for a 127 extension for my second targets. And hopefully we'll continue to press down. It looks to me that we are actually creating another ascending triangle here. In fact, we are, and if I was not already clearly in this trade, this would be another trading opportunity I would be looking at. But now that we've talked through that trade, let's go over to another trade that we took today on the New Zealand yen in the same direction, going short, and we have also already taken first profits in the other trade as well. Alright guys, so we sold this ascending triangle here. As I said before, in the rules that we stated earlier, I am allowed to trade triangles at any point as long as I'm with the underlying trend. We came up, put in an ascending triangle, and we sold the breakout here on this red candle on the New Zealand yen 5-minute chart. And after that we just did a 1 ATR stop after the close of this candle, which was 7 pips, and you can see that here. And for our reward, I just wanted a little better than a 1-to-1 for today's example. And as you can see, we are pressing down now and getting pretty close to hitting our targets. So hopefully this market will continue down and we will be taken out for our take profit. And I believe I'm going to trade this with multiple targets today. So here I'm just going to go in and replace that with 2 lots instead of 4. So I'll be taken out for first targets here. At that point I'll move my stop loss down to break even and see if we can get some kind of trend continuation to the downside. As you can see, this market has been bearish for the past couple of days. Alright guys, I'll go ahead and pause the video and I'll be back if we end up hitting targets or getting stopped out. Here on the 3-minute chart you'll see that we've actually put in a descending triangle as well and broken through the support level of that descending triangle just a few minutes ago. We'll draw in our support level here and our descending resistance here. So with this being the case, what we are expecting to happen here is, after this impulsive move down, this period of brief consolidation in way of a descending triangle, the break through this triangle, and hopefully a considerable move to the downside to continue the overall trend in the market, which is down. And now we seem to be getting a little closer to targets here. Hopefully we will be filled as we come a little lower. And there we go, guys. Targets filled on the New Zealand yen trade. We filled the targets for half the position that we were in. We had a 400,000 unit position, and now we are down to 200,000 units, and we have now put $150 in the bank. Our stop has been moved to break even, and we're just waiting to see if this market continues to press down in trend continuation. Second targets are going to be down at previous structure, and what I'm going to do is just, as we break below the lows, I'm going to manage this position by placing my stop loss above the previous resistance. For instance, my stops are at break even now, but if we manage to get a little more of a close under this level, then I will be managing the position by placing my stop above this resistance level, and so on as the market continues to move down, if it does in fact move down at all from this point. So as we come down to my secondary targets, all I'll be doing is taking my stop loss after every break and close below a previous low and moving it down to above the previous high. Break and close below the previous low, stop loss above the previous high, and that's how I'll be managing this position until we hit, if we continue to press down, towards target number 2. And otherwise, we'll be stopped out for break even with some profit made, and I'm completely satisfied with that. Alright guys, so as you can see, trading these simple price action patterns can be a profitable strategy if you implement them in the right way. If you create your own set of rules, like we did here today, and you test these simple patterns using the rules that you've created to see if it's profitable over time, then you have an opportunity to create something that could turn you into a consistently profitable trader. And I know I talk a lot about backtesting, and guys, let me tell you why. Backtesting is not the most fun. It takes a very long time. It's hard for a lot of people to do. Some people enjoy it. Those people are weird. No offense to you if you're one of them. But backtesting is not very enjoyable to me. I just know that if I don't backtest, my emotions will control my trades. And I would find it hard to believe that any of you would be any different. If you have real money on the line, if you're risking a real $100 bill, or in some cases if you have a larger account, if you're really risking $1,000 on a trade, and you have no idea what the statistical probability of being right is in that trade, then you should be scared. You should be worried about placing that trade, because you are living in the realm of the unknown. But once you backtest the strategy and you see that out of 100 trades, if you would have taken every one of them in the same exact way, using the set of rules that you have applied to your strategy, that you would have been right 70 out of those 100 times, or 60 out of those 100 times, and you know that you on average had more than a 1-to-1 risk reward, then it becomes effortless. It becomes emotionless, more importantly. Backtesting is the only way to take the emotions out of trading, in my opinion. Or at least that's been the case for my trading. I found no other way to keep myself from getting emotional once I had real money on the line, other than backtesting a strategy for years, for hundreds of trades, to see that if I do consistently place this trade in the same exact way, I will be profitable over the long run. There's an incredible ease that comes over you once you have done that, and you no longer look at the P&L in your account every 5 seconds while you're in a trade. You no longer sit there and stare at the chart once you've placed a trade, being discouraged over every tick that goes against you, and overwhelmingly happy over every tick that goes for you. Now don't get me wrong, there's nothing wrong with being happy about making money, but doing the testing takes a lot of the emotion out of trading, which is key to your success as a professional trader. So take this information, take these rules and change them, keep them the same, figure out how you want to place stops and targets for your simple pattern trading strategy, test it in the markets, keep me updated on what you come up with, and make sure to comment below the video if you enjoyed this content. As always, subscribe if you're new, and make sure to click that like button before you leave. Best of luck in the markets throughout the rest of the week, and I'll talk to you guys soon.